question of the day. What is the biggest risk this week? Joining us now for her take is Gargi Chaudhuri, BlackRock head of iShares Investment Strategy Americas. All right, Gargi, what do you think? Biggest risk?
Hi, Alex and Guy, good to be here. So biggest risk is definitely one that would mean a lot of hawkishness from all of the central banks. So I think we're all pretty much expecting that hawkish pause from the Fed. We're all expecting the ECB to go again. I think not enough attention has been paid to BOJ perhaps, and the risk, and again, this is not the base case, but the risk would be that the BOJ also surprises with some kind of YCC abandonment, and all of this happens with the backdrop of inflation that remains quite persistent, quite sticky, and really puts the Fed in a quandary, if you will.
Talk to me about the relative impact of the surprises, Gargi. So let's say the Fed were to hike. Talk me through the impact of that versus, for instance, an ending of yield curve control in Japan, because we talk about these as if they are similar risks. Are they not similar risks?
Yeah, so just to reiterate, so obviously the expectation at this juncture, at least for us, is that the Fed does pause for now. Even if we get a stronger than expected CPI, and again, the expectation here for us is a 0.4 on the core and a 0.1 on the headline. I think that's pretty consensus. And if we get something thereabouts, and if we continue to see a deceleration in core X shelter, that makes the Fed feel very comfortable about pausing for now and seeing the evolution of data. Now, if we get a much stronger than expected CPI, does that tide them a little bit to maybe going in June? I hope not. I think that they've signaled enough that they want to pause, but perhaps. Now, when we, to your original question about the Bank of Japan, that's a risk that we're really not talking about. You know, I was listening to the show earlier, and the person that came on earlier was talking about how initially we'd expected, right when the new BOJ governor came along, many had expected for some kind of announcement earlier in the spring. Of course, that didn't come. I do think that if there was a surprise in this week's meeting, June 15th, 16th, I think that could have really strong implications for the long end of the Japanese JGB curve, of course, but also for the US rates market, especially if it came with the backdrop of a stronger than expected CPI in the US. But base case remains that the Fed should and will pause for now.
So yeah, of course, because then you'd have sort of repatriation into Japan. We talked about that a few months ago. Like, will that happen? The long end of the curve, hence like really the binary outcome if you end that. Is there a binary outcome in the US market at all?
I think a continuation of a yield curve steepness, or at least the beginning of the move to steeper curves. I think seeing longer, that inflation risk premium that has been so missing in the fixed income markets in the US, perhaps coming back, investors moving away from, or Japanese investors moving away from the long end of US credit or US treasuries, and perhaps getting back to their own local, all of that could play out. I think that would have some ramifications on the very long end. So I would still steer clear of, you know, sort of 10 plus or 20 plus sectors in, you know, the Treasury or the IG credit curve. But again, owning the front end, and we've talked about this for quite some time, owning sort of even the belly of the curve, even going out to 3 to 5 years, especially now when we finally got no more cuts priced in. I think that's been one of the best developments over the last couple of weeks, where we no longer have rate cuts priced in by the end of this year, which is absolutely the right thing. Higher for longer in a 4% or even 3% CPI world, and the market's finally pricing that in, which creates a fantastic opportunities for owners of the ag.